Welcome to The Explainer, where we break down really complex topics into clear, actionable insights. Today, we're going to talk about two of the most intimidating systems out there, taxes and immigration. Okay, let's dive right in. For most people, these systems feel like an impossible maze, right? Just full of traps and dead ends. But what if you had a map? We've analyzed expert reports to show you how a strategic approach can turn that confusing maze into a clear, navigable path. You see, there are really two ways you can go about this. There's the default path, which is reactive. You just follow along, pay the bills you're told to pay, and kind of hope for the best. But what we found is there's a much more powerful, strategic path where you actually use the rules to your advantage.
So let's start with the tax code. We all think of it as just a burden, this bill we have to pay. But it's really more like a set of incentives. And understanding one key structural choice can unlock the very first door to some pretty significant savings.
For a lot of entrepreneurs, this is one of the biggest financial hurdles out there, the self-employment tax. It's a flat 15.3% on all your profits, and believe me, it can be a massive drain on your resources. It's a really common trap in the maze. Now check this out. A simple change in how your business is structured can fundamentally alter your tax liability. If you're a standard LLC, 100% of your profit gets hit with that 15.3% tax. But if you operate as an S-Corporation, you can strategically split your income.
Let's put some real numbers to this. Imagine your business makes a profit of $140,000 for the year. As a standard LLC, that entire amount is subject to the self-employment tax. But as an S-Corp, you could pay yourself what's called a reasonable salary, say $60,000. That part is subject to normal payroll taxes. Then you can take the rest, the other $80,000, as a distribution. And this is where the magic happens. That $80,000 distribution is not subject to the 15.3% self-employment tax. That single move, that one structural change, could save you over $12,000 in a single year. We're talking about the same business, same profit, just a much, much smarter structure. But it's not just about your business structure. The government literally uses the tax code like a treasure map. It leaves clues that lead to massive benefits for people who participate in certain activities, and real estate is one of the biggest ones. So here's a really powerful strategy. When you buy a rental property, you can do something called a cost segregation study. Basically, it lets you identify parts of the property that wear out faster than the building itself. You know, things like carpets, appliances, and light fixtures. By depreciating those things much faster, you can generate a huge paper loss, a loss for tax purposes, even if your property is actually going up in value. And that paper loss has very real-world value. First, you can use it to offset your rental income. But here's where it gets truly wild. Expert analysis shows that with a short-term rental, you might be able to use those losses to offset your active income, from your day job. This could potentially wipe out your tax bill entirely. Okay, let's switch gears and apply that exact same kind of strategic thinking to the immigration labyrinth. Because it turns out it's not just about getting to the destination, it's about choosing the right vehicle to get you there. Just take a look at this comparison of two high-level pathways. It shows you how critical that initial choice is. First, look at the mechanism. The EB-5 is an investment, at least $800,000. The Gold Card is a non-refundable gift of $1 million. That difference shows up again in the return of funds. With an EB-5, you could get your money back. But for many, the biggest difference is family coverage. One EB-5 investment can cover a whole family, while the other route might require a separate payment for each person. But listen, it's not always about having huge amounts of cash. There are also these self-petitioning pathways for people who have extraordinary abilities or whose work is considered to be in the national interest. These are strategic routes that let you completely bypass the need for an employer or sponsor, which gives you a huge amount of independence and control.
So, okay, we've looked at taxes and immigration. On the surface, they seem like totally different worlds, right? But what's really fascinating is that there's a powerful unifying principle that dictates success in both of them. According to the experts, understanding the full history of a case, the entire timeline, is everything. You absolutely have to see the whole picture, because some small detail from years ago could have massive consequences down the road. And every single step of that timeline has to be backed up with overwhelming proof. It doesn't matter if you're proving the legal source of your funds for a visa or just trying to justify that reasonable salary for your S-Corp. The burden of proof is on you, and it is immense. And the stakes here are incredibly high. If your preparation is weak, you're probably going to get a request for evidence or an RFE. And this isn't just a simple question, it's a major roadblock. It can delay your case for months, sometimes even years, and it adds this huge cloud of stress and uncertainty to everything.
So, this all brings us to the most important takeaway of all. It's not about finding some secret loophole, it's about making a fundamental shift in your mindset, from being reactive to being strategic.
Here's the key insight. The tax code and the immigration laws, they aren't just a set of arbitrary rules designed to trip you up. They're a playbook. They lay out the exact steps you need to take to win, but only if you're willing to learn the game. Ultimately, I know these systems can feel overwhelming, but by understanding the map, by learning the rules of the game, you get the power to navigate that maze on your own terms. So, the only real question left is, are you ready to play?